I think that the first issue is the currency is being devalued everywhere in the world. It's being devalued at the rate of 20% or more, at least in the U.S. Every other currency is pegged to the U.S. currency. If the U.S. currency actually just collapsed 37%, which is what the S&P index is pointing to, that means the euro collapsed 37% against scarce assets. That means the Chinese yuan collapsed, the CNY collapsed 37% because it's pegged. That means that the Saudi currency, the Emirati currency, the Swiss currency, the Singaporean currency, every first world pegged currency collapsed 37% against scarce assets. Second and developing world collapsed 20% more. And the third tranche, the weak currencies, Zimbabwe, Venezuela, even Argentina, Syria, Iran, Lebanon, they're collapsing 80% against scarce assets. So now you got to ask the question, what if I don't want to own 100% Bitcoin? Mm-hmm. But by the way, it's like people think it's risky to own Bitcoin because it's volatile. That's basically myopic thinking, because what you're doing is you're putting blinders on and you're fixating upon the volatility of Bitcoin instead of looking out. How much did the volatility of Bitcoin hurt you if you own Bitcoin in Lebanon? Because they devalued the currency 90% and they seized and froze all the foreign assets. So you lost 90 to 100% of everything in 12 months. Okay, so the volatility of Bitcoin, which is up 280% in US dollars and going back and forth, is, a friend of mine says, when there's blood on your collar, your dry cleaning is the least of your concerns. Mm-hmm. That volatility is second or third order. If the airplane is depressurizing, you're worried about the hygienic standards of the oxygen mask. Who gives a crap? You're going to be dead in 60 seconds, right? When the ship is sinking and you're worried about whether you got the best seat on the lifeboat or try to figure out whether you wanted this one or that one, you're going to be dead in 2 hours. So if you have if you're Jewish in Germany in 1932, the only answer is you needed to leave. That's the only answer. There was no other answer. It was just going to get progressively worse. And you're screwing around debating whether you should take a 25% haircut to sell you. Everybody, if you read the history, first they sold their property for a 40% discount, then a 50%, then a 60%, then an 80%, then a 90%, then a 95%. Then they lost everything. Then they had to pay a ransom to get out. And if you were lucky and you paid, a huge amount of money, that came from somewhere else, you might have got out. That's what happens when you have a collapse in a socioeconomic system. So the summary is there's no diversification strategy that works in Venezuela, Benjamin. None. There's nothing that works other than you got to go orthogonal to the monetary system. So let's say in the U.S. we buy the notion that the dollar is collapsing 20 to 35% against scarce assets. And we can debate what it is, but it's at least the M2 money supply is 21% or something. The S&P is telling you that the money supply is, that the currency is collapsing 37%. That's what it's telling you based on history. So if you don't want to own all Bitcoin, then my advice would be buy a bunch of residential real estate you're going to live in the rest of your life. Buy a beach house. So I buy a house I want to own the rest of my life because the Federal Reserve can't print that away. They're not going to take 37% of my house away each year. Okay? That's good. Then I buy scarce assets. You could buy collectibles. Yeah, you could say, what is a good investment? Something that a wealthy person will want to buy from you in 10 years. Buy a franchise trophy asset. If you have an asset like maybe the Jets, maybe a sports team, If you have an asset which you think is going to hold its value and appeal for the affluent for a decade, regardless of what a politician might do, then you might want to hold that. Do you want to hold a building in New York? Well, you know, your property rights can be impaired. The Supreme Court this week just ruled against eviction for non-paying tenants. So if you were holding an apartment building thinking that was an asset, that was impaired during the lockdown, and you can't move it. So I don't know, maybe. I wouldn't own cash. I wouldn't own a bond. Bonds have a negative 20% real yield. Now, what about gold? I wouldn't own gold. Gold is if we look at the results, what is the market telling you this year about store of value? Bitcoin is up 276%. Gold is down 2%. S&P is up 39%. NASDAQ is up 44%. And if you bought long-dated bonds, 10 to 30-year treasuries, you're down 12%, which totally makes sense because it'd be stupid to buy a 30-year sovereign debt that was yielding 1.2% interest, which is where you were 12 months ago. Should you buy Picasso's, baseball cards, comic books? I mean, maybe buy a portfolio of rare art because wealthy people will probably want to buy the rare art off of you. What worked well? Single-family housing's up 25%, according to the headlines in the Wall Street Journal last week. 25%. Hampton's houses are up 50%. Luxury real estate, things that are highly desirable that people with money want, right? You want to buy. You would say Ethereum's up even more. Yeah, I mean, there's certainly small. You probably Tesla, meme stocks. You can find other things out the risk curve that have also performed well. So, I mean, you could look at those. My issue here is there's two existential macroeconomic questions you got to ask yourself. One, will a political activity impair the value of your capital? For example, will Amazon get unionized? Will Apple or Google get broken up? Will there be an antitrust action? Will it be positive and negative? Will China ban Apple from manufacturing iPhones? Will there be a tariff? Will your property get impaired by a tariff, a tax, or a regulation? Because, Ben, the most valuable companies on earth, in theory, should be the water utilities and the power companies, electricity and water.